What's going on, guys? I just want to talk about next week, the little weekly outlook I have. Not really a weekly outlook, more like Sunday night, Monday outlook. But Friday, I seen we had this 4-hour IFVG. This candle closed at 10 a.m. So I'm like, okay, that's pretty bearish here. We also have data lows from last Thursday or 2 Thursdays ago. And we also have equal lows here. So this liquidity looks really nice. I'll probably be shorting it Sunday night, maybe Monday morning, but I did trade London session. Here I'll show my Friday couple of trades I took. There was a bunch here, but uh so we took this was like a take partials break even trade. So we do have a lot of those. Like I always end up like here was another take partial break even trade that I took. I always send these in the group. Here we never got the re-entry, so obviously I never took it. Here we had this 4 minute, another scale half, break even trade, scale half, break even trade, data highs. Obviously, the data highs hit. That was a clean setup to the data highs. This is all just last week, different things that I really just send out in the group. Yeah, excuse me. And I was looking at this Friday, not much, didn't end up hitting, so that's good. So now we have a target for next week, but that ended up being a break even trade as well, scale half break even. Um, Here was an IFPG we never got as well. This IFPG was a scale half break even. Or actually, this one hit the full TP here. So there's really just a bunch of them. It just happens over and over. That's really how I trade. Working on these funded accounts now. So last week I made $900, 400 on one, 500 on the other. One of the accounts took a little bit of a hit. It's down like 700 right now, but I mean, that's part of trading. Like being able to manage risk well, that's really just how you stay in the game in the long run. So here's one account up a little over 500, up over 400 here, almost 500, and this one's down 700. But to me, like me knowing how to trade, like a loss like that doesn't phase me because I know I win more than I lose. When I pass those accounts, I passed it with an 80 or 90% win rate. Very rarely do I ever see anyone have an 80 or 90% win rate, so it definitely helps my personality. I don't really like taking losses, so having a high win rate helps that. Some people can take losses and be okay, but that depends, on their personality. They might have a 40% win rate, but they might have a better risk to reward. My risk to reward, is a 1-to-1, 1-to-2 mainly. So definitely looking for that sell side on Sunday. I know Daji was talking about it as well. I'm gonna go over a couple of setups that were just nice on Friday. I'll go on the MNQ chart so it's a little cleaner because I don't have any markups there. Don't do your analysis on MNQ though. Do your analysis on the mini chart because that's just where all the liquidity is and the chart might not always look the same. So during London session, there was a couple of nice trades. Like, I mean, this IFVG, it wasn't that obvious, but it worked out really nicely. I did take that. On the NQ chart, there was equal highs here. So pretend there's equal highs here. On this chart, obviously, you don't do your analysis here, so there's no equal highs. We ended up getting a tick off from hitting them, and we never hit the equal highs. So it is what it is, but that still was a nice trade. You would have scaled half slash set your break even at the first internal high, which was here. Um, find a couple more setups during London session. I might start waking up for London session because honestly, it wasn't that bad. Like I found a couple of setups that weren't bad. This right here is a trade where like we have equal lows, and if you enter here, it's not the greatest trade here. We were delivering off of this. Um, and we did inverse this, and then most of the time, 90% of the time, you're gonna get a free trade or a scale half break even. What I mean by that is we're most of the time when we inverse something like this, a singular FEG, we go down to the internal low, even if our bias is wrong. So we know once we hit this, we can scale half our position, take our partials, and set our break even, and we'll probably get stopped to break even. But it's worth the try because look what happens after. Like you could have caught this dump, and let's say you catch 5 break evens, 5 of those break even trades. Okay, we took half. off the table. We made some money and we got a break even. No worries. And then the other five that you do, there you're gonna catch five, five runners. Out of every 10 trades, I bet you five of them will be break evens and five of them you will catch a runner. I did really like this during London session. I never ended up taking it, but as you can see, it never worked out. We did inverse it. Never worked out though because obviously the bias was bearish. What I was seeing up here though last Friday when I was trading London session was like, let me get the discount. So I was seeing this range from the swing high to the swing low. And somewhere around 3 a.m., we were like up in here. I told the group, my Telegram group, I'm like, we're gonna retrace at least a 50% here, and we ended up doing it. And then at 10 a.m., when you see us rip through 50%, Dodgy talks about this, so does ICT. If you see us just rip through 50% like this, that's a very bearish signature. Like if we're bullish here, we should reject a little bit and probably get a long setup on the lower time frame, but we never did. So definitely something to keep in mind if you're trading. Um, This was at 8 a.m. I mean, I did take this one as well when I woke up. It was very choppy, but we did have an order block right here. I guess you could have used this candle or this candle, whichever one. You draw out the order block and you could have used this as your stop loss if you put it like below the swing lows. So that's kind of what I did. I was like, okay, if this order block fails, this trade is done. But I did like how this was a big obvious candle, ended up getting inversed. Um, we created these equal highs here. It was on the NQ chart as well. So I was able to scale half and set my break even there. So that was nice. Um, then we came up here and we swept some liquidity. I did like this low resistance liquidity here. We never ended up running all of it, but we did sweep quite a bit of liquidity here. We had this inverse here. I guess you could have taken here. It would have worked out nicely. Or if you didn't take that one and you wanted an earlier entry, you could have taken this one up here. That was really nice as well. Could have pyramided in when you seen the second one break, but that was super nice. Uh, This is literally what I do though. This is what I do every day. I'm trading IFVGs, I'm trading liquidity. Like, this is literally how I'm starting to make my money, and this is what I'm doing every day. And this is literally how I'm gonna leave my job. So it's not easy, but you can make it simple and you don't gotta kill yourself about the details. So here at 10 a.m. we had news. As you can see, when market opened at 9:30, we didn't really have much going on. Like we're not creating fair value gaps here. We're not really displacing down or displacing up. So really was pretty quiet there, but this was okay, I guess, after the news. If you saw this big wick, you could have scalped this down to the data lows. These are data lows because when you get a big wick during a news event, what's going on? People are buying, buying, buying here, and they're placing their stop loss below this wick. Retail traders are going to look at this and they're going to see, oh, wow, big rejection. And they're going to start buying too. And now guess what? We get an inverse down to the data lows and boom, we wreck them. All the retail traders just got wrecked. So definitely not bad there, especially that 10 a.m. lines up with the 10 a.m. reversal framework that Dodgy preaches a lot. So he preaches the data lows. That's where I learned it from. He preaches the 10 a.m. reversal. That's where I got it from as well. Um, we were really bearish here. So yes, this was clean, but it ended up not working out. It was a break-even trade. Why? Because we never hit this internal high, but we created a new internal high and we hit it. So if you're in this trade, and you see us not displace over the highs like this, like it's just you got to get out of that trade. It's probably not going to work since we can't start to displace above highs. This was okay. It wasn't obvious. I don't like the obvious ones. I know I'm pointing these little ones out, but they're just not obvious. I like the big obvious ones. This one looks like it failed. Um, yeah, this one failed. I guess you could have put your stop below this OB. Like that was an OB right here because we did sweep liquidity and then we closed above it. So then this would be treated as an OB. So that, I mean, I guess it was a fail depending on how you treat the stop loss, but this was nice right here. I think I took this trade. It was before lunchtime, so that was a nice trade. We did inverse it on this candle. You can barely see it, but that's why the bodies tell the story, the wicks do the damage. Right here was okay, I guess. We took this to the internal liquidity, say you stopped to break even and took partials. Um, we did have another one right here. I don't like this would have been a lot better if we swept this high. If we swept this high, like I would go a lot heavier in this. I mean, maybe we had an SMT here, a bearish SMT. So that wasn't bad. We had like a nice little death candle here that Dodgy would say. Also, not really a whole lot here. Um, We were sweeping these lows here with no displacement. Just could have bought this back up and put your stop below the OB here. This wasn't bad because swept we swept this liquidity here. And I think we delivered off of this. Yeah, we delivered off of this. Not as clean as I would like, but it is 1 o'clock in the afternoon, so we keep that in mind. This one was probably like a 5 minute. Like there's a bunch here, so really in this situation you would just have to go up a time frame and find the singular one. But if you've seen this, I mean, you could have definitely taken it to the internal high, so you stop to break even. And you see when the bias is wrong, what happens? We always go to the internal high, we set our stop to break even, we take our partials, and price most of the time reverses if our bias is wrong. If our bias is right, we should rip through this. That's the whole reason we use that break even method. Another one right here, stop to break even here. Reason being because we have another gap here. We don't know if we're going to reject that. Stop to break even, take your 50%. I mean, there's just so many trades over and over like this. Like it's really about how well can you manage risk and find the best ones. Here was an inception gap, so I'll explain that too. When we have an inception like this, it means we got an inverse here. Okay, so your entry was here. Your stop to break even slash your partials would have been at this internal low. And if we close back above this, yes, you would get out normally. But when we have another bearish fair value gap here holding us down, this would be my stop loss. If this breaks, okay, I'm out of the trade now. So that's what an inception gap is. Daji taught me that as well. At first, I had no idea what it was, but that kind of saves me. That's kind of how I use order blocks as well. I kind of use order blocks for my stop loss to gauge whether or not I should be in the trade or just close it out at a loss. This inverse didn't work. Why? Because the bias was obviously wrong. It ended up being a break even, actually. I'll show you why. It's confusing, but once you see it, you'll be able to understand it. So your entry would have been here. We ended up pulling back and we ended up coming and creating a new high and wicking it and displacing. So you would have set your stop to break even here because that's the new internal high and you would have got stop to break even. So you see it saves you a lot of times. I like this one. Reason I like this one is because we swept this low. And let's say we had a bullish SMT here, even better. That was nice. Yeah, that's pretty much it for right now. If you guys want to join the Telegram group, not selling anything, not promoting anything, but we do have a group full of traders who are like-minded. Everyone's on the same mission. Everyone's talking about trading. Most of them are ICT traders, so that's the good part. And so the link is in will be in the description, and also I will put it on my YouTube channel. But yeah, check it out. We talk in the Telegram a lot more than I talk on the YouTube. I'm definitely focused a lot on my trading right now and not so much at the YouTube, but I'm definitely trying to put out, a video a week for you guys. For me, it's like, okay, I trade IFVGs and liquidity, so it's like almost every video I talk about the same thing because that's really what it is. Every single day I'm doing the same thing, but it's what works. It's what I've been doing for the past 4 or 5 months, a little bit before Christmas, and this is just what I'm going to keep doing until it stops working. And it shouldn't ever stop working because why? Because we're going against retail traders. We're trading with smart money. We're trading with the big banks. We're trying to target all the newbie traders, all the retail traders who don't know what they're doing and take their stop loss. I mean, that's why ACT preaches we trade to it and through it because that's our target. The liquidity is resting above these highs, below these lows. These inefficiencies are getting balanced. Like that's the only two ways price moves. I was talking about that in the Telegram as well. We have a few traders in there who don't trade ICT concepts. They trade indicators and they don't know why they're buying or selling. And I could never understand that. That's why I could never trade indicators because I gotta know why I'm buying, why I'm selling, why is the market moving, and where is it gonna move to, and for what reason. And that's why ICT concepts work so well for me because it just fits me well. So liquidity, we always run the liquidity and we rebalance the fair value gaps. That's the most important thing. Find your draw on liquidity for the day and then trade in that direction. And then that's really all I could say. Use good risk management and be smart. Thanks for tuning in. I'll see you guys in the next one. Yeah, God bless.